Hello, everyone. This is Analyzing ETFs, and I'm your host, Dr. B. Today is May 25th, 2026. I want to say a nice, happy Memorial Day. I want to appreciate all the veterans who have served the United States of America. Appreciate everything you've done and your sacrifice. Today's lesson is on gains up to the past 5 years. So what I'm showing you here is one of my accounts. And there are 5 equities in this account. The first one is HODL, H-O-D-L, hold on for dear life. You can see that gain is up 16%. IWF, that's up 100%. SCHX, yes, that's Schwab, 69.73%. SMH, I've talked about this many times, that's up nearly 169%. And VTI, that's up 76.74%. So, what are all these ETFs? Well, if you're watching my channel, you should be familiar with most of them. I just need more people to watch my channel. So, let's take a look at this ETF. This is the VanEck Bitcoin ETF. Hold on for dear life, or HODL. Now, it's gone through some peaks and valleys where in August of 2025, that was its high, because at that time, I was up 99%, and I didn't sell it. It's okay. But right now, I showed you my gain. That's up 16%. This began trading on January 11th in 2024. So if you invested $10,000 on that date, and if it's worth $17,192, what that equates is to a 26.06% annual percentage rate, which is pretty good. But then at one time it was 99. It's Bitcoin. It's going to go through the ups and downs. So at that time, Bitcoin was approximately $125,000, $126,000 a coin. So we'll go back up again. Well, the supposed experts believe it's going to go to 250,000, maybe even 500,000. I'm probably not going to hang around that long when it does. When it gets up to about 100%, when I double my money, that's when I'm going to probably start getting out of it and maybe put something into SGov. SGOV, where I invest in short-term treasuries, which will definitely give me some gains, not as erratic as Bitcoin, but much safer and less risky. How much less risky? Well, let's take a look. But before we show you that, the assets here is $1.27 billion. The riskiness is off the charts. 259 out of a scale from 0 to 100 plus. That's crazy risky. And when you're my age, which I'm not going to tell you, if you know who I am, you know how old I am. But that is ridiculously too risky. And if you want to take a little bit of your portfolio and put it into Bitcoin, by all means. I have less than 1% of my whole portfolio is Bitcoin. And so I don't mind taking a little bit of risk, but after a while, you get older, you want to cash in your chips. Next item is the iShares Russell 1000 Growth ETF IWF. If you invested $10,000 10 years ago in 2016, your $10,000 today would be worth $54,950. That is substantial. That gives you a 17.4% annual percentage rate. Total assets is $121.21 billion. So this is very safe. This is highly allocated through your growth ETF or growth stocks. Now, I'm not going to go over that. You can look that up through Morningstar.com to find out what IWF invest in. It is risky, but not as much. It is considered, I guess, very aggressive. It's at 86%. And the reason why it's considered 86%, during tough times, growth stocks can go down violently, or volatility. Violently, we'll just say, or high volatility. Let's say that a couple times. And that has happened, during COVID and when Russia invaded Ukraine. Other events happened in 2024. and we had some dip in 2025. So twice it dipped in 2024, and then it dipped again in 2025, and then came back both times. So we're at record highs right now. So this is also a very safe, risky ETF, IWF, iShares. The next one here is less risky. It's the Schwab US Large Cap ETF, SCHX. Now, a lot of people compare this, and I did one time, with SCHD, which is a dividend paying ETF. This one I like better because the overall amount is $42,929 compared to an index of $43,083. That's still going to give you a 14.84 annual percentage rate. Pretty nice percentage rate. Is it risky? Probably not as much as the iShares IWF. But total assets is $71.45 billion, so it's pretty safe, has a lot of assets. And yes, it's less risky. Matter of fact, this is called aggressive risk. This has a score of 73. So should somebody invest in this? Yeah, absolutely. I've done well in this. So I think this is a very risky ETF. Why not? Next one here is just off the charts. I've done well with this. And if you own semiconductors, you have done quite well recently. Look at that spike in 2025. We thought it was a big spike in 2024, but nothing compared to 2025. If you had $10,000 10 years ago in the Van Eck Semiconductor ETF, SMH, your $10,000 today would be worth $237,138. That has trounced the index, which is still up at 96,000. It's amazing. This is up 37.2 annual percentage rate. This is what you're getting for the past 10 years. Now, it didn't start that way in 2016, 2017, but my goodness, what this has done lately. So, Jensen Huang, keep doing what you're doing with NVIDIA. There's other companies this is invested in. To look them up, go to Morningstar.com to find out. Total assets is only, I say only, $66.86 billion, because some people are still hesitant, but the price is phenomenal. Is it risky? You betcha. It's risky. It's at 104. This is extreme. Not as extreme as Bitcoin, but it's still extreme. Do I own a plethora of shares in this? Absolutely. You saw some of my shares of it. You didn't see all of it. So I'm quite happy with SMH. I will ride this probably till the very end, as much as I can. I thought about selling some shares and paying down my mortgage, but my mortgage is only 3 1/8%. So I checked the math, did some research, ChatGPT, and of course my financial advisor, Joan. Thank you, Joan. They said, no, don't pay off your mortgage. Don't make extra payments. Just keep doing what you're doing. Yeah, you're making 37% and your mortgage is 1.25. Now, am I making that overall? No, but look what I'm making. 17% in one fund, 14.8% in another. How about the next fund I'm going to show you? Let's see. This one's modest. This is VTI. This is the Vanguard Total Stock Market Index, ETF. But these numbers on the right should look quite familiar to you to SCHX. They are. It's the same index. It's the same category. You invest $10,000 10 years ago, you're $10,000 still. You can't complain of having $41,568. That's 14.5 annual percentage rate. Pretty good. Be happy with that. That's very safe. It's a total stock market. 3,500 stocks. Invested flows of $46.54 billion. It's very safe. Total assets are at, get this, $2.2 trillion. So if somebody would just invest in total stock market, nothing wrong with that, but then you should also do international. Now, look at the risk score. It's aggressive, but it's not that bad. It's a rate of 74. Deal with a rate of 74. That's pretty good. Ladies and gentlemen, I am going to be retiring for the third time in my life. I retired as a full-time teacher back in 2018 when I worked in New Jersey. And then I retired on October 31st as a substitute teacher in Sarasota County. of 2025, just recently. And sometime by the end of this year, I'll be retiring as a math tutor with the company I'm with. It's just time to move on and enjoy life. And traveling more. I'll be traveling to Happy Valley this summer, going hiking, and coming up in October, I'll be with some rowdy, wonderful Eagles fans, and we'll be taking over London, England. All right, mate. Thank you very much for watching my show. I'll be putting more shorts out there, but if you want me to put more videos like this, I need subscribers. I need more than 141. Hey, I'm going to get a little greedy here. I need 141,000 subscribers. Thank you very much for watching. And if you missed any of my shows, please check out the one that you're going to see here. Bye-bye.